Hi everyone, today I'm doing the monthly series that I do every month where I talk about the stocks that I'm buying and selling in the recent months. So this just keeps up the transparency so you guys know what moves I'm making in the market. There's no buying stocks and then selling them out in the background. So I hope you enjoy the transparency, and these are all the US stocks that I bought and sold between the 1st of January and the 1st of February. In fact, there wasn't any stocks actually sold, they were just buy-ins. So hope you enjoyed the video and I hope you enjoy the transparency, and let's get started. And if you haven't already, what are you doing? Get on the Patron. That's where I post what I'm buying and selling in real time, so you don't have to wait for these monthly updates. As well as that, you get 2 exclusive videos a week, and in Discord with 600 members on to talk to about stocks as well. And at the moment, Trading to a 2 I do free shares worth up to £100 if you join them. If you do want to join, a link is in the description. I think it's the best UK broker out there, and it's personally who I use as well. But let's get stuck onto these stocks. So the first one is HIMS. Now I actually bought HIMS a while ago. It was one of the first stocks I bought in January, and since then the stock is actually up 45% since I bought it a month ago. So yeah, this is actually probably the last time I'm going to be buying HIMS. I do really like to buy HIMS in the kind of $6, $7 range. So this potentially could be my last buy on HIMS if it keeps on going on this run that it currently is on. And in fact, more than anything, I'd probably be slightly looking to trim HIMS because I am up quite a fair amount now on this position after the really good run that it's had on January. But I'm still in this for the long term. I'm a long-term investor. I'm holding these for many years, and I still will hold the majority of my HIMS shares for a very long time. Now, HIMS at the moment are going to be reporting their fourth quarter results on the 27th of February. So that's a week away until we do get them. It's on the Monday. And it'll be very interesting to see if they hit the adjusted EBITDA profitability that they've been saying they're going to do. And that is a big turning point in HIMS, because if they are going to hit profitability and as well growing at the rates they have been doing, that's going to be very good. And as well as that, we will want to see what outlook they're giving for 2023 going forward. Now, obviously this company's done absolutely amazing this year. It's probably my best performing stock financially. Obviously, on a stock price point of view, until really 2023, it's starting to get a little bit more respect now. But in 2022, this company did absolutely amazing. You're talking on the last quarter, 95% year-over-year growth. Adjusted EBITDA losses are coming down, and in fact, they're going to be potentially profitable in the next quarter, which is insane. And they've been just hiking up their outlook more and more. Now, I think with HIMS, it's finally starting to get some attraction because obviously it's growing really rapidly, but what's the market focused on at the moment? The market's focused on profitability. And I think the combination that HIMS is now growing like a weed, and also it's got the profitability element to it, I think that's starting to really attract analysts into it. And I've seen this before where a company grows so fast and then also turns profitability. The stock prices can sometimes go a little wild, and potentially that could happen with HIMS. And you can see it now because it's getting a lot of attention from analysts and Wall Street. And you can see here, for example, this was on the 9th of February. It had a very good day because it got a upgrade, and they said that Jeffries said that the business has been doing very well, but that's been clear in the last 2 years they've been doing very well, and also the potential for profitability as well to be very high. So I think HIMS is finally getting that attention that it deserves, and it was only a matter of time. And unfortunately, that might be it for HIMS. I don't think I'll be able to buy any more at the range I want to buy. So if this is my last buy, I am very happy I managed to get it in. The next one was DraftKings. Obviously, this is more than likely going to appear on this monthly series. I did buy some more DraftKings. You might not be aware, or you might be aware, it was the biggest event for DraftKings last night, and it was the Super Bowl. And this is basically their best time to get new people onto the platform, because it's probably the event that draws people in to maybe use the sports book of DraftKings. And if you didn't know, in the US last night, DraftKings actually came the top 3rd app in the App Store. It was into the top 3, and that was higher than the likes of Fox Sports, the likes of TikTok, YouTube, Instagram, Google, Snapchat, Facebook, and I think FanDuel was actually in 12th place. Yeah, it was in 12th place. So you can see here the next biggest competitor. That is a big gap between them on the biggest day of the year, and to be in the top 3 was absolutely amazing. So what also might help as well is that the Chiefs actually won, so that might actually help for the hold rate as well. But obviously we've got DraftKings reporting earnings on the Thursday. It'll be interesting to see what they do financially and what outlook they give. Now they actually gave the outlook in the last quarter, and Wall Street wasn't too big of a fan for the outlook that they gave in the quarter, even though it was actually really impressive. They raised the revenue outlook, they beat by 64 million, that's no small beat either. That was a major beat on revenue, 135% year over year growth. They improved the adjusted EBITDA guidance for this year. I think the adjusted EBITDA guidance was a little bit lower than what they were expecting for this year, but they do like to go in lower and then potentially raise it. And the big thing with DraftKings is very much like HIMS. This year DraftKings potentially can obviously do very good growth, but the big thing is in Q4 of 2023, DraftKings is supposed to be hitting adjusted EBITDA profitability. So that would be a major turning point in the DraftKings story, because very much like HIMS, if you have a company that's growing this fast and then they hit a quarter of adjusted EBITDA profitability, you know, the big thing that's used against this company is that, oh, it burns money. But then if you hit the quarter, which then hits, you know, adjusted EBITDA profitability, everyone turns around and goes, oh, hold on, we didn't think they were going to do that. And then that's a big change around for what people are expecting. So, hey, we'll see what happens. Maybe they do a little bit of a shock as well and potentially bring that adjusted EBITDA out a little bit before Q4 of 2023. We'll see what happens, but yeah, that's something that I'm looking forward to. The next one was PayPal. So this is now at $80. It's below, I was going to say the same price as 2020, but it's actually below the prices it was at in 2020. It's lower than where it was in 2019. It's the same sort of prices it was at in, we have to keep going back, hold on, May 2018. And since that time, the company is miles ahead of where it was in that time period. Now, they just brought out the recent earnings, which I was actually really impressed by. And I think actually the earnings would have been really well received, but the problem is in this quarter, Dan Schulman said, yeah, I'm going to retire it in the year. So I think that uncertainty kept the stock down a little bit off these earnings. And if it wasn't for Dan Schulman saying he was leaving, I think PayPal could have potentially jumped up 10% on the day of these earnings. They were very, very good. Revenue was very strong in a period with FX. If you actually look into the actual revenue, you'll actually be able to see that on an FX neutral basis, that was actually 9%, so nearly double digit growth. And actually when you take out the eBay numbers, you can see here that it was actually revenue growth of 12 and 13% without the FX. So, you know, you consider that is some impressive growth going on here. And the EPS was really good. And they also hiked up the EPS guidance going forward. They said that free cash flow is expected to be around 5 billion. Now, you've got to remember this company is a 91 billion market cap. So you're picking this up at 18 times free cash flow. You potentially could be picking this up at 16 times forward earnings. A company that's throwing off, you know, nearly double digit revenue growth. A company that's throwing off very good growth, very good EPS growth. EPS is expected to grow 18% after they raised it from the consensus here. So this company is doing very well, and I think PayPal has been a little bit disrespected recently. I think when you look at the company, that everyone kind of ignores it, and it's still the platform that everyone goes to for payments. They've still got Venmo, they've still got Zettle, and I think this is in a very, very good place at the moment. So I've been picking up a little bit more PayPal, and that's probably going to come one of my top 3 largest positions, as well as this one here, Google. So I actually got to a point the other day where I was like, oh, I don't know if I really want to buy Google at $107. But now it's getting closer to the price it was a little bit early in January, around that $90 range, which is a lot better. 20 times earnings, and it came off a current drop of AI. So there's AI hype going on, ChatGPT, they've got Bard at the moment, and Google's AI basically failed the test, and people are worried, oh well, Bing's now going to do a lot better than Google, and when your search platform is one of your main income streams and then potentially Bing comes and takes over, everyone was just absolutely losing it. But we're still like miles or years off for when this is actually going to become the reality, and people need to take a bit of a chill pill here and realise that Google still has plenty of time to sort out these problems, and it will do. So I think that it's absolutely crazy at the moment, like the levels that Google is getting put down to just because of some issue with it, the AI that's going on. At the moment, I'm quite happy where the financials are at. You know, you're getting Google search, you know, you're getting all the other things, you're getting YouTube, and at the moment we know advertising is going to be weak, but we know advertising isn't going to be weak for 3 years, 4 years, 5 years. Advertising is going to massively come back. So in these sort of platforms, I don't really mind, because that will resolve it. The big thing I want to see is the other things that aren't getting affected by the macro environment at the moment. And Google just came off an absolute beast of a cloud. Look at the cloud growth. This is so much better than like Amazon and Microsoft's. And if this starts generating the profits like that Amazon can do, this is going to be a massive profit driver that people aren't even factoring in the next few years as well. So this company here at 20 times earnings, and what you're going to get with this business for the next few years, and that Google Cloud as well. I actually, this is a great company, and this is a stock once again I'm trying to make into a top 3 position. The next one was Tesla. Now, I actually bought Tesla right before their earnings. I was a bit like, oh, should I buy it? Should I not? It's a little bit risky. What numbers are going to do? And I bought before earnings, and it actually looks like a pretty good move at the moment. Since their earnings, Tesla has gone absolutely crazy on the share price. Now, I personally think a lot of that is excitement for the investor day. So I think we've got the investor day on the 1st of March, and we're going to see what gets announced there. I think a lot of people are staring at that and seeing what comes out there, and I think that's what's causing the share price to go a little bit higher at the moment. When we look at the earnings for the recent quarter, they weren't as bad as what everyone was expecting, and you can see that was reflected in the share price. The EPS was a beat, revenue was in line, and the outlook was pretty bullish compared to what people were expecting from Tesla. People were expected to see Elon Musk say, oh, it's all going terribly wrong, and he was like, oh, we're doing okay in the moment here. And I think that's a combination of people relaxing, how low Tesla share price got, and now excitement building around this. And Tesla seems to be doing quite well at the moment. And my last stock on the list, which is Mercado Libre. So this is my exposure to e-commerce and finance in Latin America. It's a 55 billion market cap company. It has only just started making profit this year, last year, 2022. So the PE does look quite high on it, but actually when you look at how quickly they're going to carry on in generating that profit, that should rapidly come down. So what I'd say is definitely don't judge it off an earnings basis. And Mercado Libre operates in all these Latin America companies that you can see here. So if we just click on Mexico, for example, you can see here they're selling some of the products here. As well as selling some of the products and being the Amazon of Latin America, they also offer a fintech business, and the fintech business is actually the most exciting part of the business. If we actually look off the recent earnings, for example, you'll be able to see here that total commerce revenues were growing at a steady rate, but it's when you look at the total fintech revenues, and the total fintech revenues basically doubled in the last year. And the thing is this is what has really good amounts of profit as well. So you've got commerce and e-commerce, which is okay, but the most exciting thing is the fintech, and potentially this year, fintech could overtake the e-commerce business. We'll see what happens. So that's obviously, you're picking up basically in Latin America here, the Amazon of Latin America, and you're also getting the PayPal of Latin America in one company. And once again, you consider the amount of the countries that these guys are operating in, and how fast fintech and e-commerce are growing in these countries here. You're getting basically PayPal and Amazon where they were, 10 years ago. And Mercado Libre could actually become a major company where we're talking 200 billion, 300 billion market cap probably by the end of the decade. So I really like this one, and the only problem I have is that I'd like it to come, it's been on a little bit of a run recently, so if it could come a little bit lower where I can buy a few more shares, that would be absolutely amazing. Those are the stocks that I've been buying recently. Hope you enjoyed the video. If you could, hit the like button. If you're new around here, subscribe, and I'll catch you in a bit.